So the topic is how AI disrupts finance. That's the topic we have before us. And for us to be able to like understand what we're trying to discuss, there are a couple of things we have to like, establish. First off, this topic is suggesting that it is certain that artificial intelligence, which AI means, is going to disrupt the finance function. That's one of the things, that's one of like the assumptions that this topic is posing. However, I want us to like rephrase it, because there are certain things we might be discussing today that might be challenging those assumptions. One of them is, would AI actually disrupt finance, or is AI a hype, or is artificial intelligence even something that we should be bothered about, or has it already started disrupting finance, or has it disrupted finance? Those are certain questions that we'll be looking to answer. But before we go ahead, one of the things I want to also establish is what our expectations is for this particular class. So I just speak like, just 2-3 people randomly to just tell me what their expectations is for this class. Let's see if we are going to answer your questions, address your expectations or concerns, or if what we are going to be talking about is not going to be addressing those. So I just picking people randomly to just tell me what your expectation is for this class. So Adeyemi, tell me your expectation.
One of my expectations for the class is, for me as an accounting student, an accounting undergraduate rather, I hope to learn how I can quote unquote infuse AI into my accounting knowledge to ensure that my knowledge as an accountant will not become outdated or obsolete in the future, and I can be able to pair both of them together.
John?
Yeah, the fact is AI is definitely going to disrupt finance. In fact, it has already disrupted finance. I don't know, not yet in Nigeria, but in the Western world, it has really gone advanced. So, my expectation for the class today is for me to, this AI, they don't work by themselves. They still need someone to drive them. They need someone to be the front end using them. So how can I utilize them, make use of them while in the field of finance? That's my expectation.
So for us to be able to like make sense of this presentation, there are a couple of things that I think needs to be that we need to put into consideration. One of them is definitions, because it would be very catastrophic for us to discuss this topic without having an underlying definition of what artificial intelligence actually means or what finance means. So it's important. So we're starting this presentation from definitions. Good. What is artificial intelligence? So simple things. AI is a software that is created. Again, definitions are very important. AI is a software. It was created by human beings to solve new and difficult problems with human level performance. What that means is that if there is a software that can solve problems, irrespective of how difficult they are, but cannot do it at a human level of performance, it is not artificial intelligence. For example, your accounting software is just a software. It is not powered by artificial intelligence, or does not have any elements of artificial intelligence in it, because what it just does is garbage in, garbage out. Whatever you input is what it does. The way you program it from the beginning is what it does. Any Tom, Dick, and Harry can do that. But human level performance essentially means that there's a kind of nuance to it. And to make it very, very self-explanatory, human level performance is that you learn, and whenever you are doing the next thing, you do it better from your previous experience. Essentially learning from experience. That is like the key phrase in human level of performance. And machines are not expected to do that. The kind of machines that can mimic human level performance is what artificial intelligence is. So let us establish that. There are two types of AI. The first one is strong AI. The other one is weak AI. And the reason why I'm breaking this down is so that we understand conceptually, or in context, give a context to what kind of AI we should be afraid of, if there's anything like that. For some of you that want to understand, is it going to take my job? Is it going to make my job obsolete? It's very important to understand the type. One is strong AI. Strong AI essentially is the AI that performs task that it was not initially trained for. Let me give you a practical example. You have like a software that you built to be able to build websites. That is essentially what that software does. But you ask that particular software to help you create a song, and that software starts doing it. Then that is called strong AI. Strong AI essentially is an AI that theoretically, now listen to this, theoretically, it is going to like be able to operate as a human being. Because one of the things that separates humans from machines, we're going to talk about that in the next slide, in the next couple of slides. We're going to talk about it, why human intelligence is the supreme intelligence in the world, and why we are looking for machines to be able to mimic humans to get certain things done. Humans are species that can be self-taught. Like, you can learn to be a doctor, you can learn to be a lawyer, you can learn to be a pilot, you can learn. The only sacrifice you have to make is you have to sacrifice a lot of time to be able to learn these different things. But if you're able to like study these things, maybe you have a lecturer, a teacher, and you're going to get taught, you'll be able to get these things done. That is who humans are. That's why human beings are very intelligent. But the limitation is that we do not have time. So it's going to be very difficult for human beings to be able to, one human being to be a doctor, a pilot, a lawyer, or to be able to do a lot of things at once. So we are limited by time. So it will be very difficult to get a human being to be able to do all these things. However, because machines have certain capabilities, one of which is they can process data very fast. They can be able to take things in very fast. There is a potential of machines to be able to like learn a lot of things or do a lot of things at once. So a machine can be a pilot, a lawyer, a doctor, an engineer, every single thing at once, because of machines have the ability, data processing speed. That's essentially what they have. They can be able to like absorb this data very fast and be able to like, learn them. Machines have that ability in theory. So whenever you have a machine that is able to perform tasks that it was not specifically created for, that is, it can learn those things quickly and do them even though it was not programmed for it, that particular artificial intelligence is called AI. And an example of it is artificial general intelligence, AGI. So AGI is a theoretical concept. This next one is weak AI. Weak AI essentially is AI that performs one specific task. So you have like the AI that makes websites, makes songs, automates processes within a company. That is weak AI. So currently, AGI or strong AI is a theoretical concept. Has it started happening? No. Even your generative artificial intelligence, Gen AI, which ChatGPT is a subset of, is classified under weak AI. And many of GPT's generative pre-trained transformers, GPT, that's essentially the framework under which your ChatGPT was built upon. It is a weak AI, even though it is very, very strong because it can self-learn. However, it does not have the ability to be able to operate or do everything that a human being can do. That's the biggest difference between weak AI and strong AI. So strong AI, based on this definition, can strong AI replace human beings? Certainly it will. But is strong AI, AGI, has it come into existence? No, it is not yet in existence. But are we going to get there? Probably. And we're going to talk about why there's a likelihood that we can be able to get to AGI. The next thing is, what's the key difference between artificial intelligence and human beings? Because right now we want to be like very, very specific. Human beings are the ones that currently do finance. Humans are the most important variable in finance. So what makes AI different from humans? The first one is data processing speed. Because of this particular data set is in a digital format. Let me give you a practical example. So you want to you are asked by your manager to probably write a report on IFRS 7. You're asked, and you don't really know it so well. What you do is you go to the internet, you study, you come up with a report, and then you report it. Probably can take you a day. But because this particular data is already in a digital format, either videos via YouTube or in text via the internet, A particular machine that has been trained can be able to pick up these important parts in record time and present the report. Yes, it's doing it as a human can. A human can also do it. The difference is just that because a human has to spend some time to sift through data sets, this predefined code that has been encoded in this software called artificial intelligence can be able to act as that human being, but act faster. Because now, as a human being, what you do is you go check the internet, you find it out, you read it, then you put the report together. Artificial intelligence can do the same thing that's been trained for that purpose. It goes to the internet, it picks it up, it researches it, and then gives its report. The difference is that it does it faster because it's a machine. So that's one of the key difference. Speed doesn't necessarily mean it's superior in terms of the product, but it's superior in terms of speed. Next is accuracy. Because it's a machine, it is less prone to error. Human beings, we can be tired. Humans, we can be less experienced. Human beings, we might have a lot of other factors, so we are more prone to error. A machine is less prone to error. So accuracy for AI is like important. The third one is availability. AI, because the machine is 24/7 available, humans are subject to fatigue. You know about labor laws in different places now. If you work beyond certain time, certain, maybe more than 8-9 hours a day, you have to be paid overtime. I think it's very, very popular in California and some other states in the world, Europe too. But some countries that's not the case. But the point I'm trying to make is that humans are subject to fatigue, and fatigue can lead to mistakes. Essentially cannot be available 24/7. Now, let me give you a practical example. Customer service of a bank. You made some transfer and your money didn't come to you, maybe by 12 a.m. Your expectation is that you're going to pick your phone and call a customer service agent and they'll pick the call. But it's very weird for you to find somebody that is going to be awake by 12 a.m. Like you have to put your, yes, they have like these shifts which they've been using to mitigate it. But remember, if you want to go through the human biological clock, 12, 1, 2 a.m. is the time where people should be sleeping, and there'll be most likely times when mistakes will happen because it's unusual for people to be awake at those times. But a machine does not need that. A machine that has been trained will do that particular job very easily because it does not require it's a machine essentially. So availability is one of the things, and these things I've mentioned are one of the advantages that artificial intelligence has over human beings. So use this concept, use these things to essentially build your context about where we are going to. The next one is no judgment. Now this is a disadvantage. AI at this point in time, especially weak AI, does not have like the concept of judgment. Judgment essentially is built from experience. So the kind of judgment call you are going to make on certain things based on certain situations, maybe a partner of a big four company's judgment level is expected to be higher or better than that of a staff because of the years of experience they've accumulated and the kind of things that they've gone through. Judgment is one of the things that human beings have over machines. We can be able to make judgment calls on certain things that are not like, prescriptive. We can be able to, like, for example, like driving. Let me use driving as a, there have been self-driving cars today, but self-driving cars are not even up to the efficiency of a human driver, because a human driver can be able to navigate certain situations, but machines have not gotten to that level. And the reason why they've not gotten to that level is because of machines are fed by data. They have to be, they build their intelligence from the data that's been imputed into them. But data cannot be exhaustive. That's just the reality. There might be new situations that come on board. A human driver will probably just maybe, let me give you an example. What's a very rare material I can talk about? Let me say AI was built with plastic. Say, okay, plastic, when you see plastic is an obstruction. A human driver will probably see something like that is not plastic, maybe rubber on the road, and probably like, divert or just go through it. It doesn't, depending on the instruction that was given. Or maybe they just see, okay, plastic has been given, that plastic, when you see plastic, dodge. That's like the instruction given to it. And it recognizes plastic. But then what it saw is rubber on the road, which it has not been fed with. It's going to get confused. But a human can understand that, okay, this is like an obstruction. My destination is to go there and make those judgment calls. Though artificial intelligence is getting to the point where it's being able to like become better with experience, but it has not gotten to like the human level in terms of judgment and intuition. The last point is cost. Humans, artificial intelligence, both are expensive, and we'll go into the reason why both are expensive in a bit. Okay, so now, how will AI disrupt finance? I'm going to classify finance across different buckets. So I'm going to be looking at finance from the back end side, that's accounting and investments and other parts of finance. So accounting, investments, and other parts of finance. That's where I'm going to be looking at it from. So how is artificial intelligence actually going to disrupt it? Or will artificial intelligence disrupt finance? That's the big question before us. Will it, or has it actually done it? I think John mentioned that it has already started doing it in many countries. And I can allude to that is in jobs, or it has the potential of replacing job, or some jobs have become obsolete and whatever. Those have been the news going on. But what is real and what is hype among these things? Looking at the characteristics of artificial intelligence mentioned and some of the biggest advantages, one of the things that comes to your mind is that when it comes to functions where data processing speed is an advantage, where availability is an advantage, where what was the other one we talked about, where accuracy is an advantage, or where cost is an advantage, AI will most likely like win in those areas. Again, theoretically. Now, I'm not talking about AGI. In this context, we're talking about weak AI because that's what we have. We don't have AGI at the moment. So any talks about AI we're talking is what is already in existence, aka generative AI. So these are the biggest advantages that it has over human beings. And for functions that requires data processing speed, requires accuracy, and it's like I require some kind of cost savings, AI is likely going to be very, very efficient areas, or will be a better alternative theoretically. And now we are going to start from accounting. So how is artificial intelligence infiltrating, or how would it potentially disrupt accounting function? So there are different ways or different buckets that have placed this. One of them is data collection and ingestion. Then I'll explain this in a bit. For some of us, accounting is a rather prescriptive function. Essentially, we have standards, we have accounting standards, we have transactions that are fed into a system, and we have like these transactions organized in a readable format in form of financial reports. And these transactions are organized in terms of financial reports, and whatever decisions we make on the basis of those financials. That's essentially what accounting is in a readable format, and then we'll make decisions on that basis. That's accounting. But one of the things you have to understand in this flow is that there's a data flow. So data flows from when activities are happening, buying and selling, and this data is captured via a system. Currently, the way it works is like accounting systems, bank statements. What other data collection pool do we have? ERPs. For very large companies, the procurement function with their procurement software, cash and bank, the bank accounts, transactions that happen, purchases and accounts receivables, whatever systems we have to collect these things as they have. If when you see this, when you hear me talk about these things, what comes to your mind is that there are different pools or buckets that collect these transactions as they happen. I don't think it's not every transaction that passes through a company's accounting software. In fact, accounting software was made so that it can be able to collect these transactions as they happen. That was the essence of accounting software. So it becomes very, very easy to collect them. Some companies don't even have accounting software at all. What they have is just their normal Microsoft Excel. You just carry Microsoft Excel and you record whatever transactions that that happens. In between the transactions and what you are recording, there's a potential for error, because maybe somebody bought stuff for like 50 naira and paid cash. maybe the person that collected the 15 naira is someone that is, for lack of a better word, blind, or maybe the person was tired, the person recorded 14 naira. So there's a discrepancy between what happened and what was recorded. In these scenarios, there is potential that, one, the data that is going to be collected is not going to be complete because you are using disparate data sets or disparate data buckets in this case. So there's a bank statement that is recording cash transactions. There's the accounting software that is recording some other activities, including cash transactions. There are off accounting software or off bank statements activities, like maybe related party transactions that cash was not paid for, or agreements between compliance, or maybe there was a fine on the company. Maybe there is a fine on that company and the company refused to disclose all those things. These are things that happen in accounting that could potentially be chances for errors or chances for omissions, errors due to omission or commission, whatever the case may be. But with artificial intelligence, there is a possibility. Now, listen to my word, possibility that these errors are eliminated. First off, one of the things that leads to errors is timing. That's the timing between transaction and when data is collected. That's one of the things that leads to like errors. So when a transaction happens and when it is recorded, because of that timing difference between them. And that's why we have like a bank reconciliation statement, a bank reconciliation activity to reconcile, like, the GLs, what happens in the cash section, cash column of the GL versus what happens in the bank statement. And we know what those reconciling items typically are: interest charge, on credited checks, and what have you. I don't want to go into that. So this timing difference is what essentially leads to a difference in bank statements and the cash GL. But with artificial intelligence, it is very, very likely that these differences can be reconciled very quickly, either reconciled or there will be no need for reconciliation, because it understands the nature. Again, remember, human beings do this cash reconciliation or bank reconciliation. We do it ourselves because we understand it. But if a machine has been trained to be able to understand, and a machine that is faster in terms of processing data, so when that transaction is already happening, you understand the potential. This is what is happening. So let me just even make this correction immediately. It is possible that for functions that requires data collection functions, aka imputing transactions in an accounting software, aka transactions happening in a bank statement, aka taking those transactions and putting them together in a financial report. It is possible, there's a potential that particular function can be automated using artificial intelligence. That's very, very possible, because once the function involves collecting data from disparate sources, or collecting data from when transaction happens, when they are recorded, or data collection whatsoever in any shape or form, artificial intelligence can be able to do. Let me give you a practical example. So there was a particular project that we're trying to work on before GPT came on board, which was how possible it was going to be a machine that when you finish getting your numbers from your accounting systems, it just prepares your financials depending on like the standard, like the country you just input. So for example, let's say I am domiciled in the US and I'm also domiciled in Nigeria. It can be able to prepare my financial reports, my 10K. That's for the US, my 10K, thank yous. It just prepares it based on the basis of the data set that's had, like very quickly. It just does it. And this is something that's theoretically possible because financials have like a structure. There are these, what they call it now, the parts of like the parts of what's this thing called, components of financial statement: income, expense, assets, liability, equity. These components of financial statement, these are things that are pretty prescriptive. We have standards that address different things. So when it comes to things that are of that nature, where you have to pick data from a source and convert it to another source, artificial intelligence can be able to easily replicate it because of one particular skill it has, which is speed, data processing speed. Again, there are certain limitations to that judgment, because sometimes it's not about input and output and presenting it in the form that the regulatory bodies want. There might be certain kind of judgment calls we might make, because there are some transactions that are not even straightforward. There are some transactions like estimates, accounting for estimates that are not really straightforward, that require some level of judgment that I might not be able to do. But you see the ones that requires collecting data, transforming it to another form, it's going to pretty be able to do that. That's the first part. The next one is research. Sometimes we might be given like an assignment to research on how to treat certain accounting functions, or maybe certain things around, especially taxes. Let me put it, taxes is a very, very important one, where you have to like sort through the different tax statutes and then make a recommendation to a client, or just find out what the law is saying, especially for countries that have rapidly changing tax regimes. Artificial intelligence can be able to sift through whatever thing, provided it's on the internet, and make a research very fast and just make it. And now I think we already use this in our current reports. Like when we are made, I doubt if there's anyone on this call that does not use Chat GPT to do their assignments. In fact, when it came out, I think a lot of people, there was a particular essay that I put out, and I saw that I was just in similar things, the same. Everybody was just writing it, because they just went to Chat GPT and just told Chat GPT to write it for them. I was like in 2023, I think early 2023, February 2023, when it was still new. A lot of people I just saw it, I was like, look at these people. You went to just type something on Chat GPT and just expect it to give you an answer. Expect that nobody is going to find out. That was one of the very weirdest things that happened to me. But taking that out, some kind of advancements that is happening, or that will continue to happen, is going to show that like research is a part that is going to be pretty automated in coming years, and AI can actually be better than humans, apart from the areas that requires judgment calls. Then the other part is reports generation and tax filing. I think we already talked about this one. Generating financial statements, generating management reports, generating whatever thing that needs to be generated, provided it's a standard document, AI can potentially be better. Then client service and advice. This is a very, very important part, and this is a part that cuts across a lot of functions. As customers, or as people that need certain service, our demands are very, very specific. If you ask a person, what do I want from a bank, for example, or what do I want from an accounting firm, what they want is that they want that accounting firm or that bank to take them as their only customer. I think Sterling Bank called themselves the one customer bank. That's what they call themselves, the one customer bank. So the implication of one customer bank is that, or the implication of anything of that nature, is that you want to be seen as the only person that is being serviced by these particular companies. But it is not probable that there's going to be a one-to-one arrangement or engagement for you. Like every one of us would love to have one accounting officer. Every one of us will love to have like our own situations, our accounting situations or advice to be tailored to us. That's what a lot of people, but the cost implication is impossible. Like it's very improbable for like a bank that has 5 million customers to employ 5 million staff. It's not probable from an economic point of view, both economic and in terms of the talents that are even available to get it done. It's improbable. Even 1 to 2, even 1 to 4, even 1 to 100 is not probable, because from an economic perspective, it's not possible. It's not like it's not probable. That's the word. And secondly, from a talent availability perspective, it's not probable. But artificial intelligence has the ability to personalize because of its data processing speed. It can be able to personalize this service, and it looks like you are having a one-to-one arrangement. For example, for an accounting firm that has like 1,000 clients, and they are preparing financials or handling the advisory for these people for 1,000 clients, the possibility here is that You can be able to have a machine that mimics how humans can be able to interact with you, and it takes care of you like a partner, or like a an account officer is taking care of you. So for accounting functions, especially when it comes to professional services, when it comes to client interaction, AI is going to be able to like help when it comes to relationship management, because it gives you the ability to have a one-to-one like relationship. So it's already happening today. Whenever you go to like a website, you are talking to a chatbot, and the chatbot asks you certain things. Though the chatbots we have are pretty like, elementary, but with an AI enhanced chatbot, the implication is that it looks like you're talking to a person, and the person is attending to your needs in real time, and it looks like they are just focused on you. You can talk to them as long as possible. You can talk to them for 24 hours. You can talk to them for as long, and they just solve your problems. That is the kind of personalization we are looking for as customers. And it is this thing that drives like the possibility that artificial intelligence is actually going to like, be able to like do better when it comes to client service. And by client service, I mean like, relationship management, in that respect. Yeah. So at this point, any questions before we go to the next one? So Muhammad, you can ask.
Yeah, sorry, in part where you mentioned why AGI can't be considered now, like it's not really clear.
Okay. Okay. So the reason why I said why I can't consider AGI now is that AGI has not happened. Like it's not real. It's not something that's been achieved. Because AGI essentially is artificial general intelligence. It means that it means that it's a machine that can be able to perform functions as a human being, perform all functions as a human being. That's essentially what it means. So the machine was not created. Let me give you an example. ChatGPT can be able to like, do all functions at a human level, even without being trained for those tasks. That's what AGI means, or that's what strong AI means. So that has not been achieved. It's still a theoretical concept. So it's the theoretical concept that you created a machine that can think like a human being and do every singular function, even though it was not trained for that function, and to get it done at human level, because it has the ability to self-learn. Human beings have the ability to self-learn, but we are constrained by time. We cannot learn everything because we are constrained by time. But a machine is not constrained by time and has data processing speed. So in theory, a machine can be able to learn how to be everything that 1 million human beings can do faster than they will. So it can be able to do everything that 1 million human beings can do. That particular theoretical concept has not happened, so we cannot consider it. I don't know if you understand.
Yes, sir. Thank you very
All
much.
right. Okay. Adeyemi and Pascaline.
Okay, sir. So you spoke about you asked a question on how, based on everything that you have said, do we think AI can replace accounting or the accountants? Um, I think it depends first of all on how we look at accountants. What functions do we think accountants serve in a company or in an organization? If we're only saying they're just there to do the financial statement and all of those, and that is their only duty. Yes, the AI I think has already gone leaps and bounds beyond what an human can do, and like it does like in seconds or minutes. So if we are looking at that, yes, but if we're looking at the accountant's duty of advising the company, of speaking to the management, of curbing their excesses, I don't think that AI has gotten to that stage yet. That does not mean that it will not get there, or they are they're not already working towards that. But at this moment, I believe that an accountant still has a function to play in an organization, and any function that is, like you said, that is repetitive, like they are doing it over and over and over again. AI can do that very easily. But for the things that are still niche to an human, which are, like I said, speaking to giving them advice, curbing their excesses and speaking to them. I don't think AI can has taken that role yet.
Okay, John, can you go?
Okay, fine. Yeah. For if you ask me if AI will replace a bookkeeper, that would be a yes, because the bookkeeper job end at just recording transactions. They're making judgment or making decision of those transactions. Evaluating them is the job of the accountant. That is even the most important aspect of it. Now, and then you stress on that important of judgment, which as at now, as at today, there is no proven fault if the AI can do that. If we want to work with what is on ground today. So for the question if AI will replace accountants today, I would say no. But who knows? Maybe in advance for the AGI, if it's on ground, well, let's leave that one. That would be a different answer to that. But what is really realistic now, I don't think AI will be able to replace the accountant. I mean, they still need us. Even though with the advent of different accounting softwares, for us to for companies to be able to make good decision of that, they need an accountant to explain that the software can just although it will give a result, but making judgment of those results generated, they still need humans to do that. So I don't think here we're able to do that as at what is on ground now.
All right, thank you. So the I think you guys just gave very, very brilliant submissions, and I really love that everyone is understanding where this is going to. So if I hear you correctly, will AI replace a bookkeeper? Most likely. Will AI replace functions that require judgment, like a full-scale accountant in terms of giving advice? Maybe not. And I like the way you're going to. But if you listen to what I said, remember I said that there are certain areas. I mentioned client advice and client service and advice. Remember, client service is tailored. It's very, very tailored. Are you saying that the current artificial intelligence we have today, like generative AI, cannot give tailored advice? Is that what you're saying? Have you used GPT-4?
I think AI can give some level of um client services, but not all. Because when we look at most big deals, even when people know something, sometimes you know something, you know this is the right step, but you need somebody to really sell it to you and convince you that this is the right step. And that's not exactly a strong suit of AI. What most I think the best selling ability of human, why AI would find it very difficult to replace human, is that we understand each other and there's emotions involved in a lot of deals. So when it comes to actually how we relate, AI will always take almost the same approach with people, looking at your answers to determine what you would do. But people, when we meet each other, we know, okay, this is going to fly for this person, but this would never work for this person. I might be giving the same advice to two different people, but my approach will almost always be different because they are two different individuals. Now, this is something AI would find very, very difficult to understand.
That's a very brilliant answer. Okay, good. So just put some context into this. I think we should just go ahead. To put some context into this, it's very, very important that we understand certain things. Um, we understand certain things. Why can't AI replace an accountant yet? Two things: judgment. We just mentioned it. If you're using like the latest form of generative AI, which is like the strongest weak AI we have right now, GPT-4, it can make certain kind of prescriptions. It has the ability to, but it hasn't gotten to the level where it's at the level of like an accounting partner, someone that has like 10 years, 20 years experience. It hasn't gotten to that level yet. So for areas that requires judgment calls, bringing up new standards, those kind of things, I don't think the current AI we have can do it. Next is sales. Question I want to ask you is this: do you think that would you be more comfortable talking to a human being than a machine? Who would you be more comfortable talking to? I think most people, the answer is going to be humans. And that's where like sales and relationships come into play. Some people do business with you because of relationships. They really are not doing business with you because of they're not doing business with you because they want to like, what's that word now? They're not doing business because of you because your service is the best. Some of them are doing business because they trust you and they trust that you can deliver good work. And most importantly, for accounting or audit related functions, you are putting your name on something. So they are looking to quote unquote hold somebody responsible. I have a word that I have, there's something a couple of people like saying that consulting, advisory, accounting work is mostly looking for who to hold responsible. It's less about the skill. Yes, even though the skill is there, but more about who would you hold responsible. So if you have something like, okay, you are holding, you have a couple of people that, oh, they didn't do something correctly, and oh, you are going to hold this person responsible. It just makes it easier that, oh, you know that you're holding somebody responsible for it. So even if a machine can do it better, you can't quote unquote hold a machine responsible, but you can hold testimony responsible if things go wrong. And that's why you see some of these big companies, these big consulting companies have a lot of clients. They have a lot of clients because of sometimes, yes, they do good work, but most importantly, because you can hold somebody responsible and their name is on the line. So when it comes to judgment calls, sales, client relationship management, it is not yet at that level. And it is because of human biases. Humans are more comfortable when they are dealing with other human beings and they want to hold somebody responsible. So bookkeeper replaceable, probably. An accountant replaceable at this point in time? I do not think so. So I think that has we've gone to that one. The next one is investment AI. I think investments, the core of investments is essentially maximizing returns. That's what it is. Maximizing returns maximization. It is that simple. So whenever it comes to like investment, what clients are looking for is they want to get maximum returns for whatever investments they are. And in that case, artificial intelligence can help in achieving those outcomes. One of them is automated trading. What's automated trading? Essentially, automated trading is that the kind of trading bets you would have probably made as a human being, considering a lot of factors, this can be automated to make those decisions easier. AI can do that easy. There are a lot of automated trading floors everywhere in the world now, especially by the biggest hedge funds. They're already doing it. So this is not even like, this is not a theoretical concept. This is happening. Automated trading is happening per seconds billions, because of what you are doing is you are considering certain factors, fundamental, technical analysis, and you're making decisions in real time. And that has been automated. And they can take note of like new events happening and make those decisions in real time. So that's really, really easy. The next one is risk management. Risk management has been something that has been like, being like being the basis of any investment, because the most important, if I ask you what is the most important goal of investment, is it returns maximization or capital protection? What would you say?
Capital protection.
Muhammad, what do you think?
I'll say both.
I said choose one.
My capital.
Okay, Musumola, what do you think?
Yeah, capital protection as well.
Capital protection, good. Okay, good. The point is capital protection, because you can't make returns if your capital is depleted or if your capital is gone. So you have to protect your capital. When protecting your capital, you want to protect your capital. You don't want to protect your capital and lose on returns, because what brings customers or what brings clients is returns, not necessarily capital. Nobody thinks about it, capital protection, but it's the most important part actually. But nobody thinks about it. Nobody's going to come to you because you're going to protect their capital. No. They come to you only because they believe that you will give them more returns. It's that simple. And that is where the human greed comes into play. However, in terms of managing risk, both in terms of exposures to the different kind of landscape, and in terms of exposure to fraud risk, especially fraud risk, these are areas that artificial intelligence is already helping, because again, data processing. Always remember this particular factor. The reason when it comes to a particular function, that data processing, that a large amount that involves understanding a large amount of data and making decisions on that basis, then data processing, then artificial intelligence is most likely going to disrupt. Simple. It's going to disrupt. Automated trading, you are making decisions on the basis of different data. An experienced person has observed this data over time, seen the patterns, and can make decisions. Risk management, you've seen these patterns over time, you're collecting this data in real time, and then you're making decisions. You see that there's something that is fundamental in these things, which is data processing. AI has a higher speed than humans, so it's mostly going to do a better job at these functions. The next one is personalization. I think we already talked about this, which is essentially providing client service at a one-on-one level. And this is not data processing now. This is more of availability, because it is available 24/7, and it can be able to and again, can be able to process data concerning that person at record speed. It performs very, very well. Then the other one is compliance. This is a part that is a big deal, because I've seen a lot of companies that are building in this scale. You see a lot of, if you go do a Google search on legal AI, it is mostly around compliance. Compliance is always changing every single time. And one of the important parts is keeping track of these regulations and monitoring them. Reporting and monitoring, that's the two key parts in compliance. So companies must always report that they are compliant, and they must always monitor how they are compliant across departments. This is something that is drudgery. If you've worked in very large organizations, you understand what I'm saying. You have to know, okay, if there's a marketing material that is going out, before it goes out to be sent to the legal department will check it versus the regulation of marketing in that country, especially for advanced countries. It's a hell of work, because marketing material that should go out in real time is not taking days, sometimes months, because approvals needs to happen. With artificial intelligence, this is almost eliminated, because whatever reviews that have to happen, it's going to be checking it against those regulations. And these regulations are mostly prescriptive, like they are standardized. So it's going to be checking it against it and give you approvals in record time. And this just reduces the work. Has it been able to, does it replace the people doing this job? No, it just makes them more efficient. So answering one of the questions, I think was Adejoke that raised it, or Blessing that raised it. If you're working in a compliance related function, like investment banking, for example, or in the legal team, or anything that involves compliance, or even taxation, I think artificial intelligence, specifically GPT-4, can be able to help you make this job very easy, because you are able to take advantage of what it provides to at least give you a draft. So and for functions that are compliance related or compliance heavy, or for those that know how to program very well, there are a couple of people that have programmed on GPT-4 to create these compliance tools that can be able to both monitor and report on relevant regulatory requirements for their industries. So yeah, that's that. Then the last one is investment management. Creating portfolio for different people is a function of their risk appetite, and it changes over time. It's something that a professional financial advisor does. But since it involves just understanding certain metrics, or what's this person's risk profile? Oh, what kind of returns fits this person's risk profile? Oh, how long is this person going to keep this investment? Oh, what are the investments available? Debt, equity, investments available, mezzanine financing, or what kind of, it can be able to take this information in real time and craft a portfolio for such a person. So as a bank or as an investment manager adopting artificial intelligence, again, I don't think AI cannot do this currently. Now I'm speaking in current terms, cannot do this on its own. So I'm not expecting to see an AI only company. I don't think that is possible. But what is possible is that an investment manager can adopt this kind of software to be able to craft individual personalized portfolio for the different customers. So they can be able to reduce their size of employees and craft highly personalized portfolio for a lot of their companies. I think the BlackRock already is doing this at scale. That's a company I'm very, very sure of that is doing it at scale. A couple of other financial advice or small advisors are actually doing it. There's this name of this software that was done for small independent financial advice. So I've forgotten. Once I remember, I'm going to send it to the group. It's already in existence. So for people that are looking into investment management, you can actually utilize this software. There are a lot of softwares in this place already that are essentially AI powered, and it's getting better with GPT-4. So yeah, got it. So my comment here is, do I think investment AI is going to disintermediate things like investment bankers? I don't think so. Because again, investment banking and any other kind of investment focused role is relationship based. People do not give money to machines. Remember, as I mentioned, capital protection is the most important part, even though it is not the reason why people give you, but it is an implicit function. And because of capital protection is important, trust is important. And for trust to happen, you don't trust machines, quote unquote. At this point in time, with this generation, I don't think we trust machines as much as we trust human beings. That's why you see that there's still an underlying fear with fintechs. See, some people still say, no, I'll give my money to First Bank rather than give it to OPay. I'll give my money to Union Bank or all these big banks or this Zenith Bank rather than give it to one kind of money point. Not because these people are not more efficient, but because of trust. There's a kind of trust deficit in society. So I do not expect in the next 10 to 20, and now this is my opinion, in the next 10 to 20 years, that artificial intelligence is going to disrupt the investment space outside these things I've mentioned. So my verdict is that for investment, AI is going to be an efficiency booster or a productivity booster. It's not going to replace a lot of people. So it's just going to be like an addendum to like the functions that are happening there, because this industry is driven by trust. Not much judgment, but trust. There's a lot of trust that is involved in our relationships. So I don't think it's going to disintermediate anything in the investment space. So the next one is banking. And this one is commercial banking. And I think the areas where mostly these 4 areas are the 4 key areas. Now, one of the things you have to put into consideration is that many of these things are not exhaustive, like fraud detection. It is quite ironic that AI has created an avenue for more fraud to happen, and it's still helping in fraud detection. Because if you see there was a particular video I saw at a particular time, I did not know it was a fake video. They call it deep fakes. And these are things that are made possible by new technologies. So what I'm trying to say is that technologies by themselves are okay, but it is how people use them that differentiates it. So some unscrupulous elements in the society are going to use this technology for their own purpose, which is defrauding people. But for those on the white hat side, they are using this increasingly for fraud detection. So, and the reason why it's used for fraud detection again is because of data processing speed. So you can be able to recognize patterns very fast and make certain decisions. So you see, for some companies, there was a time, was it last year, last month, no, 3 months ago, I was making a transaction to the US, and because I was in Nigeria, I made that transaction. It was flagged immediately. It was just flagged immediately. The speed at which it was flagged was because of, definitely there was like an automated system, because human is not going to flag that thing at that speed. It was like a machine that's actually been put into place to, like, just red flag anything that is coming from these regions of the world for certain criteria that is best known to them. But what I'm trying to say in essence is that a lot of banks are already, like, strengthening their fraud detection systems with artificial intelligence. In this case, I mean, like, with AIs that we already have, like, for that specific purpose. Then next one is customer service. I think this one is pretty, like, this one is pretty known. We know that a lot of customer service are now, automated. We have chatbots that are like AI enabled that essentially give you real-time feedback tailored to your own purpose. This is only going to get better. In fact, outside banking, customer service generally in the world, that industry is going to be one of the areas that is going to change. Put it in perspective, anything that is client-facing or that is consumer-facing that requires some level of personalization is a ripe arena for AI to take charge, because it is very expensive for people to take those roles. It is very, very expensive. You see a lot of companies are now like outsourcing some of these functions, like bookkeeping. Many of these functions are outsourced by foreign companies to, like, Africa, Philippines, Asia. So these are functions that are actually very, very difficult to be able to, like, they are difficult to be able to provide at scale. So once there is an economic benefit using artificial intelligence to do customer service, do bookkeeping, it's there. So just put that in mind. The next one is credit scoring. I think credit scoring is pretty straightforward. Credit scoring essentially means on the basis of a particular number, which takes certain data, give them weights to tell if you should give someone a loan or not, or if someone is eligible for a loan or not. That's just a pure computation. So I think this one is pretty straightforward. This one has been in existence since in banking, even before artificial intelligence became rife. So we don't have any problems with that. The last one is back office automation. Again, this one is pretty straightforward for banking. So things around hiring, things around legal work, things around IT support, whatever kind of support things that goes into play, artificial intelligence can be able to help. So one is this. How does this concern us as finance professionals? The big question that when we started this presentation is, will AI take our jobs? That's the big question. For me, I think that is the wrong question. For me, I'm more interested in what do I stand to gain with the advent of artificial intelligence. That is essentially where I want us to pay attention to. And one of the things I'm very much interested in is investments. What do I mean by that? They said that when there is a good rush, the people that sell the most are those with picks and shovel, because that is what people essentially utilize in making whatever decisions that they want to make. So who are those that are going to benefit? How do I benefit from artificial intelligence rush? I think a lot of us are more focused on what it can do in terms of making our job easier. But many of us are not focused on how we can be able to position to benefit from like the artificial intelligence space. And that is one of the things we want to start thinking of as finance professionals. Because as finance professionals, you should be able to understand the implications of events or transactions or things that are happening in the world. That's what separates you. That's what sets you apart. So what does the AI supply chain looks like? Before AI can be able to work or should work, there are three things that needs to be in place. One is semiconductors, essentially chips. Semiconductors or chips, as the case may be, are like the things that have made it possible for you to be able to use a phone, use a laptop, use a computer in the way it should be used. Essentially, these lithium and whatever metal materials that has been put in place to make these things work, or to make it possible for them to work the way they should work. It is useful. It is what has made the phone useful. It's what has made the computer useful, and it is what is making artificial intelligence also useful, because there are certain kind of metals or materials that can make this work. That's the first one, semiconductors. The next thing you want to know about is lithography. Lithography essentially, put in simple terms, is how these chips are being layered or how they are being arranged in the form they are arranged in for them to make computation. One of the things that can make a software run is what we call hardwares. Hardwares are the things that actually make software work. So they are the infrastructure upon which software is built. And before these hardwares can be able, and before these softwares can work, there is a structure in which this hardware should be layered, because what you are seeing in terms of software is built upon the back of physics and electronics. That's essentially where it's built on. So everything you are seeing in computing is a function of the interaction between software and hardware. So if the hardware is not layered in a certain form, software is not going to work. I'm getting somewhere with this. The last one is GPUs. GPU is essentially the processor. Why I'm saying this is that you do not have artificial intelligence or any form of technology today without this hardware basis. It's impossible. You will not have it. And for AI to get to the level of AGI, where it becomes like very evident that it is working like a human, it needs this hardware part or this infrastructure, both the materials, the manner and way it is structured, lithography, and the end product, GPUs. And why the supply chain is important is because it just tells you that, okay, even if this thing eventually takes my job, How do I position myself to be a beneficiary as a finance professional? And I think one of the ways is investment. That's right. And my thought is, if you will not be able to make smart investments if you do not understand how the AI supply chain is. You won't be able to make a smart investment. So it's our responsibility to understand that, okay, for the AI software, in terms of doing those magical computations, trying to make things work, trying to replace tasks, for it to be very efficient, there's certain things that need to happen. This hardware needs to be in place, and they need to be in place cheaper. So the first thought in your head is, okay, what are the companies that are responsible for this infrastructure? What are the companies that are responsible for these picks and shovel to make this possible? Who are the people that are the biggest players in the semiconductor space? I think a couple of examples come into play. One of them is TSMC. This is the Taiwan semiconductor company, one of like the biggest or the biggest in the world. So in my mind, from an investment perspective, I'm going to have a thesis. Okay, AI is going to disrupt finance. True. As a finance professional, how do I position here? For AI to be actually be able to do a lot of amazing things, it needs to be able to like if AI is going to like be advanced in semiconductors, essentially the industry too has to advance. And with that advancement, which is like the foundation, there are certain companies that are already doing amazing things here. Why don't I just position and buy their stock? So even if things go bad, I know that I'm benefiting from the boom in AI. It's called creating your future. And I think it's one of the things we want to start thinking about as finance professional. Next is lithography companies. There are a couple of amazing companies. I think ASML is part of them. There's Synopsys. There are a couple of amazing companies that are doing things within this space. So you want to start understanding, okay, these are companies that are doing these amazing things. And for AI to actually become advanced, these companies are also going up. Then the GPUs, like the NVIDIAs of this world, the AMDs of this world, there are certain companies that are actually making the mark in this space. So why I'm saying this is that understanding the software of artificial intelligence on how it takes our job when it eventually does that is less important than positioning for impact first from an investment perspective. So as finance professionals, you want to put that in your mind. AI is not going to be stopped, not in the foreseeable future. But irrespective of whatever happens, how do I position myself for impact? Hardware companies are going to go so far for AI to actually get its full potential. So it is easier for me to position for within these companies when there's again, what I'm talking about is buying their stock. This goes back to the last class. This is not financial advice, but I'm just giving you a framework to think about it. So the next one is position yourself. The next one is position yourself. And in the beginning of this class, some of you mentioned that, okay, what are the jobs that you think AI is going to like, take? And I told you like the advantage, because I can't say it explicitly, that AI is going to mostly replace these jobs, because it goes beyond the fact that AI has advantages. There are certain alignments that needs to happen, both in terms of the people that are responsible for these industries and in terms of what level of trust the public wants for it to happen. However, when you want to think about jobs, you want to think about jobs that requires more creativity, jobs that requires more relationships, jobs that requires more judgment. Again, this is a very contestable point, because for you to become a senior accountant, you need to be able to have started as a junior accountant. That's just the truth. You need to be able to do bookkeeping. So if that part is totally disintermediated or totally automated, how do we now train the accountants of the future? That's a big concern. So as you're positioning yourself for job to become creative, I think what you want to do most importantly is to become masters of your craft. Become masters of your craft and become very, very solid very quickly. So the minimum level might not be the minimum level in coming years. You want to get very, very, because in years before now, it was okay to have a secondary school certification. Now, bachelor's degree, master's is even looking like it's not enough. So you want to start doing these things very, very quickly. And you want to choose jobs to be safer, that requires more judgment and creativity. What kind of jobs in finance exist in those areas? There are jobs in like investing, jobs in banking. Again, the reason why I'm calling these industries is because, one, there's a lot of relationship there. And secondly, they are even the ones that are championing the finance that goes into these particular areas. Does it mean that every other area is going to be like eliminated? I do not think so. Or it is not simple. The other parties can join AI finance builders. There are a couple of amazing companies that are coming up that are building amazing software to be able to make your finance functions more efficient. The thing is that with your knowledge in finance, either as a bookkeeper or as a banker or as an investment banker, you understand the processes better than a pure technology person. So you want to start looking at these areas with keen eyes and see where you can be able to contribute, maybe in building the next AI functions of the future. Who knows? You might be the next Jeff Bezos, or the next your software might be like the one that replaces the entire AI, the entire finance function. Who knows? Or the area that you believe that, okay, based on what we've talked about, there's an area that data processing speed is going to make this particular function better. That's another thing you want to look at. Then the last part is do nothing. You can just sit down and just, let things take its course. And if you remember, one of the reasons why he names this particular sheet attention is all you need. It means several things. One, you need to pay attention to trends. This first point and this second point are like the most important. This first point, second point, and third point are the most important points here as finance professionals. You want to start looking at investing in the AI supply chain because it is one of the easiest ways to hedge the risk. Secondly, you position yourself in jobs that have more creativity and judgment. And thirdly, you can start thinking about building the next AI softwares. That's how I think you position yourself so that you do not become obsolete, or you do not lose, or win or lose, you're safe and fine. Yeah, I called it attention is all you need. The reason why I called it attention is all you need, if you can go and read, there's a particular report titled Attention is All You Need by Google researchers. It was on the basis of this particular report that ChatGPT came into play. It's very technical, but you can go read it up. But it's quite ironic that Google were the ones that wrote this research, but OpenAI, aka powered by Microsoft or supported by Microsoft, are the ones benefiting from this. That's a topic for another day. We can have that conversation offline. But it just tells you that what you need to do is to pay attention to trends. It doesn't matter the direction of where that change is going. Once you're properly positioned, you'll benefit from it. So now the big question is, are we going to be jobless by AI? That's the big question. From everything I've said, do you think we are going to be rendered jobless by AI as finance professionals?
Okay, first of all, I don't think everybody will be made jobless by AI. I believe that, like I think I said earlier, I believe that people who are very smart who are very smart in looking at the usefulness that AI has and the importance that it is, the importance that is growing rapidly in the world as a whole, they can look at that and try to improve their skills, try to ensure that they are indispensable as much as possible to their to the organize to not just the company that they currently work for, but also other firms around them. I believe that I don't think that AI will take all of our jobs.
And for me, I feel some people, right, will be rendered jobless. Why? Because, like you said, you were rounding up. You said it is advisable to follow the trend. So I guess those that refuse to follow the trend, like those that refuse to know that at this point AI is the new normal, and then don't do like as finance analysts, investment bankers, and the rest. They are the ones that are likely to be rendered jobless. Why those that decide to follow the trend, those that keep equipping themselves are likely not to be rendered jobless.
Okay, so I do believe that AI is here to stay, and definitely those that are able to, just like as Adeyemi and Esther said, those that are able to, invest in themselves skill wise and leverage, the technology would be able to um keep their jobs, especially when they're able to understand the key point of positioning themselves in jobs that are not going to become obsolete. Like you have said, jobs that don't require a lot of data processing, a lot of automation, a lot of customer oriented jobs. I feel once we are able to position ourselves, we are definitely going to be, will I say, more conscious that okay, we have more security over our jobs.
I think AI is not going to make anybody jobless. I feel like AI is a much needed personal assistant, which would encourage efficiency and time um saving skills. For me, it's like AI means you can take on more customers, you can have jobs done faster, and it also means that the only people who would have say is the best of the best. So it's basically screening out. AI means you have to be your best at whatever job you're doing. If you're a customer service attendant, be the best. So if they're letting go of 10, you be the only one they're keeping. So basically, that's what AI means to me. It means everybody has to do their best.
So I think we all answered well, but my answer is I don't know. That's a simple answer. I don't know, and I'll tell you why I said I don't know. I don't know because the truth is this: when it comes to efficiency, AI is more efficient than a human being would ever be. That's the truth. That is the truth. Is it difficult to understand or believe? Yes. Is that the reality? It is. But there are certain areas I think we have better advantages. When it comes to issues of trust, human beings will always have trust deficits. That is the truth. We always have we always need relationships. Like we want to talk to somebody rather than a machine. Those are possibilities that needs to happen. That is actually an existence as a result of human nature. It's not necessarily from an efficiency perspective, but from human nature. So tailoring this down to the finance function. Finance function involves the movement of money. Investment, you are giving somebody your money to generate returns for you. The person can use artificial intelligence to be able to structure those investments, to do automated trading and whatever. These are things that would have been done by human beings. But now it's going to require less human beings. The implication of that is if I'm to hire 7 people, I or another person will just do that investment company and we are fine. So has it rendered 5 people jobless? Certainly it has. It's a conversation that I think a lot of us are not talking about, or we said, oh, we are going to use it. The implication of using AI to get more efficient is that certain rules are going to be redundant, or we are going to be achieving things at supersonic speed and will not need as much people as we should. That's just the reality. I think it's something we need to be able to face. So the implication of that is just to take with some of what you guys have said. It's very important to get really good at something. Getting really good at it essentially takes time. And we are very lucky that we are in the beginning of the possibilities of what this technology can do. That's where we are at the moment. And one of the things we can easily do is to take the bull by the horn and select careers that requires more creativity and build ourselves very quickly in those areas. Speed is of the essence. That's the first thing. And this is my opinion. Again, don't take this as truth. This is my opinion based on my understanding. I'm a bit pessimistic about it, about the potentials it has, especially when it comes to job creation. When I hear things like AI is going to create more jobs, I feel like it's coming from a point of ignorance. When I hear things that AI is not going to take our job and it's going to make us more efficient, I feel like we're not saying the whole truth. When it's not taking our job and making us more efficient, the implication of that is a job that 10 people can do, 2 people are going to be able to do it. Simple mathematics. Before machines came into place, that was how it used to be in the world. 10 people used to do certain things, but with machines coming into place, one person can be able to plow a field. The implication of that is the large number of people that should be plowing that field are already rendered jobless. Same for certain areas. Customer service, for example, in a bank, it is highly probable that even weak AI in its full potential is going to potentially replace most customer service operators. It's already happening. In fact, if you understand what BPO service is, which is business process outsourcing, which means outsourcing certain functions from your area of primary residence, it has taken a lot of job away from advanced countries in terms of, especially when it comes to customer service. There is this particular restaurant I saw that they said they are using Zoom cashiers, essentially cashiers from Philippines and Indian to be able to handle orders. So they don't have anybody employed from America to be doing that particular function. What has that done? That's taking away jobs from the locals. It is efficient for the companies to do that because they want to minimize their costs. but you're taking away jobs from the locals. That is the reality. And that's the same thing that is even going to happen as AI helps in efficiency. How do we avoid this? Yes, we can avoid it by upskilling, but most importantly, upskilling as fast as possible. That's one way. Another area I think we want to actually be very methodical about is to be more relationship based in terms of what we do. That's why I used to be I usually do not used to be a proponent or a fan of being on LinkedIn, making posts. I usually was not a fan of that. But in this new age, it's very important to be personable and to put a face to what you do so that you can build social currency and trust. It is very important. You cannot emphasize that enough because the most important skill set is not just going to be your technical skills. The most important skill set is going to be your relationships management, your emotional intelligence. How can you handle people? How do people trust you? How do you work with people? That's what is going to be most relevant because at that point in time, in terms of efficiency in doing the job, you cannot be as efficient as a machine. But one of the things you can do better than a machine is that you are personable, you are original. People can relate to you. People know that, okay, this person, I can trust this person with my money. That is what matters at that point in time. Okay, this person gives accounting advice. I think I can trust this person to give me accounting advice. Not because the person is not going to use AI to get the job done. You can use AI to get the job done. Someone else does not use AI to get the job done. The person is going to trust the other person that did not even use AI to get the job done because they trust the person or the person has more personality. Because that's what counts at that point in time. And it's very, very important I stress this and stress this enough. Because for us as people, we put so much priority on our technical skills. Why this is good? The reality is that when it comes to areas in finance that involves knowing your standards, explaining them very, very well, I don't think you can do it better than an AI powered system. It's unlikely. Very, very unlikely. That's just the reality. However, one of the things you can do is to be more personable, as I said, to create more relationships, to utilize these tools to your advantage to solve more problems for people. That's what now stands you out. So my prediction about the future is that in years to come, what is going to be making people stand out for employment is not going to be their technical skills as much as their people skills. So you want to start building up your social capital very quickly. That little thing you are doing as an accountant, have you started solving problems for people around you? Have you started solving problems for the small shops around you? How good are you with solving their problems and building those relationships? That's the first thing. Next thing you want to start thinking about is by being builders. Okay, let me start from the investment. As being investments from the investment side, I made mention of certain things in terms of investments. I think one of the things you want to do is to go and read up on this infrastructure because AI goes up, AI comes down. It's very important that you are placed to be successful, not just in career, but in terms of finances. I'm an active believer of that. Again, my opinion. I'm an active believer that, okay, if things go bust and I lose my job as a result of AI, how do I benefit from this? And I've already made mention of something, investment. It's very important that you start understanding the implication and what that supply chain looks like. It is very, very important. You want to start thinking about it very actively. I don't know if some of you have portfolios already you are investing in. I don't know. But I'm expecting that after this class, a lot of you should already start your personal investments, no matter how little it is. Because my expectation is that you already have like the rudimentary knowledge to be able to analyze companies. Maybe not very professionally, but in your own little corner, you can do some of them. You can start looking at some of these companies that were mentioned that are within this space. I talked about the semiconductor companies. I talked about the companies in lithography. I talked about the companies of GPU. NVIDIA is very popular. Everybody talks about NVIDIA. Go and read up on why NVIDIA is popular. It is popular because of it's a big infrastructure for like the artificial intelligence boom. So it is again infrastructure. NVIDIA is not an AI company, no, but it provides that infrastructure for AI to actually be able to go far because it has the hardware basis, the computational basis in this case for AI to be able to explode. There are a couple of other companies that are not as known that are going to make that future possible, and they are already doing it in different areas. You want to start looking at them and start looking at how you can be able to bet because there are different ways of betting. You can bet with your job and you can also bet with your money. So you want to start looking at those areas. Then the last part is the last part I talked about relationship, I talked about investment, I talked about, essentially positioning yourself for the kinds of job, especially for those of you that are very, very early in your career. Sorry, building. Also, those of you that are very early in your career, you want to start prioritizing areas where you can be actively involved in fact, what I'm trying to say in essence is that during the fintech boom, you see that a lot of people started working in fintech companies. The implication was that they saw companies that were the future. So if you have offers from companies that are building the future, AI in finance, you want to start prioritizing roles in those places. The implication of that is you can potentially get an upside if those companies succeed. I know in this part of the world, we don't have a lot of companies that are doing amazing things in that area, but in the future, you want to start thinking about it actively. That is a way you can hedge the risk. So this is my opinion. You don't have to take it, but I think that as finance professionals, rather than thinking about how it's going to take our jobs from us, we want to start creating our own future by ourselves by one, becoming more personable and building people's skills. Very, very important. Next is positioning investment in that space so that when it do go up, we are beneficiaries. That's another thing that finance people do. You're not just finance people for jobs, you're finance people for yourself. There has to be that training should show in yourself, in how you are managing yourself. Then the last part is join companies or prioritize companies that are building that future. So that is all I have on this particular subject.